and of course, a lot of guest speakers, eminent persons in the area of the regulation, the control, the exchange matters, and then also friends from the media. Good morning to all of you, and I wish you a happy new year. So a little late, but I think it's a great privilege for me to be here with you this morning. I've just been spending some time with the MSMEs and the SOCM, and of course, we're also busy looking at the issues raised by Ms. Prasad Rao, and I really congratulate the organization for taking up, it's a bridge between the regulator, the exchanges, and its members to sort of raise issues, discuss, debate, and resolve. And the way Ms. Prasad Rao has listed various issues, I would like to respond here and there. We have heard the exchange, the two major players, and also we have heard the detailed account of the regulator, and of course, brief by Manoj. I would like to just give a little broader, outline. I'm sure we would like to appreciate the viewpoint of the government, as I would be, focusing my small brief intervention basing on the observations of the then Finance Minister and the President of India, that the association should, all the members, all the stakeholders, should play a very important role in the nation building. That's what the central focus is, and also that's through the propagation and then percolation of the policies and programs of the government regarding the capital market. And there are issues raised by various members here. I would like to briefly say the theme is very, very appropriate: sustaining the growth in the turbulent economic scenario. This nation building is a very, very important word, I would like to say. And there are issues raised, Ashish ji mentioned how we are stagnant almost. We are not expanding the investor base. And then, of course, Madam Chitra mentioned the products, and then the investor base. I think we would have to concentrate when we say investors. What investors? What is this nation? This nation has been under great transition. I think you must understand. We always try to compare the West. We are 300, 400 years old. We are a nascent country with 65 years. We have gone a long way. This nation has more diversities. Investors need to be instilled confidence. There should be special measures, I agree. But this nation has been seeing so many ups and downs. But we will come up. We will raise. This has been our experience. When we got at the dawn of independence, we didn't have anything to eat. Now we're proud to have around 450 lakh tons of buffer stocks, thanks to the policymakers, thanks to the economists, thanks to people like you. I think we will definitely go successfully. We will surpass all our difficulties. And they have raised this nation. We have seen growth of 8%. We have seen, and above also, in the worst years, we had a savings rate of 30.8% and an investment rate of 32.8. We have seen the highest growth rate of 9.5, and also in the best years, we have seen the investment rate of around 36.8, and also the savings rate of around 38%. It is not that and of course there was a little, and I'm happy to say that the the first depression or whatever economic downturn, we could not be much more effective. Thanks to Madam Indira's initiative, the strong financial fundamentals we have. Of course, mere growth needs the investment. Investment is important. The investment is also guided by few factors. Prasad Ravji has mentioned the CAD. Of course, we are very happy. Of course, we could compress the gold, and then we are now expecting a CAD of very manageable limits, say 40 to 45 billion dollars, which is definitely will be financed. That's what our Honorable Finance Minister keeps on saying. I mean, we are very safe. As far as your fiscal deficit, of course, the red line of 4.8 shall not be breached. I tell you, we had just had a review of what is happening on the revenue front. Somebody mentioned about the tax structures also. Definitely, we would like to have a tax laws which are very, very, we don't want any harassment. We want to promote the non-adversarial regime. We want them to be more of a facilitator than a regulator as far as tax administrators are concerned. We want to simplify the tax laws. We want to promote voluntarily compliance. And of course, we don't want to spare any avoiders or even rule breakers. That's all. But I think we are fairly a robust system, and we are happy when the economy is. I think the growth this year is pegged around 5%, 4.8 to 5%. I'm sure. But the targets grew by 12.5%. The tax collection rate has increased. I'm happy. But we would like to stick to our targets. We are trying our best. Definitely, the investment also depends on some other factors, like we have seen in this country, the exchange rates. I know the people have mentioned, I'm not an expert on the exchange matters, but it should be resilient. In a democratic country like India, there is a lot of variation. We must allow for that resilience. At the same time, we must insulate against the speculative tendencies and then possible volatility. Now, I'm happy that we could arrest that volatility. The Indian rupee is, I think, today 61 the dollar. I'm sure Indian rupee, it's not the fluctuation, but we need to address this volatility. I'm sure India rupee will find its value. It will find its place. It will be stable. I'm very confident, thanks to Mr. Rajan's effort and then the government's efforts, and we have been able to send a message that we are on the trajectory of growth path is very positive. I think that's what the sentiment the speakers reflected here. And I also would like to say that another factor is the inflation. Now, I must tell you, the current CPI is around 9.9 as on today, and then wholesale price index 6.1. I'm happy that there is a growth in the agricultural production, and especially the agricultural rice is at 104 million tons, and then wheat 93.9, and then cereals 42 million tons, and then pulses 17 point odd tons, and then oil seeds 30 plus million tons, sugarcane, in fact, the main the contributor for the food inflation are the eggs, the meat, the pulses, and of course now the prices of vegetables have come down. So I think we are very very comfortable at this juncture from the inflationary trends. We will see a downtrend. That's what we expect. But at the same time, I would like to know that we have in our country, we have been able to reduce our imports thanks to some of the, because the growth or sustaining the growth depends not only on the capital availability, capital formation, but also other factors in India. Thanks to the recent judgments, we could release and then export a lot of iron filings which were lying waste and then unnecessarily becoming a burden on the exchange, foreign exchange. And we are trying to reduce our import of coal by developing the domestic coal. I'm sure you'll appreciate in those what circumstances those blocks were frozen, because we need to understand that not only the regulatory framework but all the public perception also is framed by the media. Media's role is very vital in a country at this juncture, because it's a perception that's very important. And I really would like to appeal to media that let's not talk that there is something wrong unless it's conclusively proved. It's the perception which is making a lot of negative impact. I would appeal to them, verify the facts before tarnishing any particular coal blocks allocation was sought to be made more transparent. Thanks to the UPA's efforts, the RTI made a tremendous, it's opened a new frontiers of giving confidence to the people by knowing the information through right to information. And also there are so many other measures which the government has taken. You see, it's not only the role of exchanges or the members of the army, but it's when you can infuse more capital, more, if you can invest the more number of people from small towns, villages. After all, with the 130 billion population, I'm sure it's 2.3 or more, not more than 3 crores are your investors.